All righty, it's the middle of June, and everybody wants to know, is the real estate market going to stay hot, hot, hot all summer long? Well, I'm here to tell you. My name's Ed Huck with Keller Williams Citywide and the Ed Huck team, and I'm going to give you your June real estate market update in under 5 minutes. So I'm going to talk real fast and hit a lot of quick points here. So what is going on? We're going to dive right into this. So mortgage rates are about flat from where they were a month ago. They've kind of gone up and down a little bit. They were a little over 7. Now they're a little under 7. So a 30-year fixed rate mortgage is sitting right at about 7%. And from everything I continue to read and hear is it's going to stay there or maybe tick down just a slight bit. And then maybe towards the end of the year, October, November, December, start to soften a little bit and maybe get into the mid 6s. But we will see how that continues to play out. Number of new listings. So currently, new listings, it's about flat. So it's actually down 0.3%. So if you add Cuyahoga, Lorain, and Medina counties together, we're sitting at about 9,000 new listings for the year, which is almost exactly what we had last year to date. Number for sale. So the number of available homes actively live for sale right now is actually less than we had last year to date. So, but not a lot, right? It's only 3%. So it doesn't feel like a lot less. Number of homes under contract. So they've gone under contract. Again, it's almost flat. It's only down about 1.9%. And then the number of homes that have actually transferred is almost identical. It's a 0.5% difference between this year to date and last year to date. So it's a very similar this year to last year. So average sold price is up. The average sold price year to date is up 6.3%. And then if you look at the rolling 12, which I like to look at that because it gives you a better idea of what's actually going on long term. And what I mean by that is you get, historically in real estate, the spring, we're a little bit busier than we are, say, in October, November, December. And if you look at a rolling 12, it takes that, a full 12 months versus the previous 12 months. And average sale price is up about 5%. And the goal, and not necessarily the goal, but the average we've seen long-term in Northeastern Ohio is right about that 3 or 4%. So we're kind of getting back down to, we're not seeing these 10s and 11% appreciation anymore. We're back down to kind of where we were pre-COVID. Average asking price. This is interesting though. When you look at this, to see the average asking price is way up this year to date versus last year to date and the rolling 12 month as well. So I think part of what's happening is sellers might be getting a little bit aggressive when it comes to listing their homes and pricing their homes and trying some high numbers before they get realistic and lower them. And the other thing, this is a function of, I think there's some new construction in this figure. So that's why you see that this average asking price is up so high. Days on market is actually down. So I guess I should make that green. It's down 2 days. But again, if you really look at the big picture, I would almost call that flat. So on average, it's taking about 44 days to get a house under contract. Average asking prices, I guess we talked about that. Days on market, months worth of inventory. So in the realtor world, when we look at buyer's market versus seller's market, this is what we look at, is how long does it take for our current number of homes for sale to go under contract and transfer. Actually, right now, it's things are selling a tiny bit faster. I know it says, 7.9% faster, but really that's only 1.2 versus 1.3. So I'm calling that even. So this year to date versus last year to date, again, like I said before, it feels very similar. What I continue to hear people getting worried about is, when is the bottom going to fall out? We keep thinking that these values are way overinflated, and what's going to happen? When you look at this graph, and this graph is from our Keller Williams convention back in the end of February, but it's still very, very current. This green line is the 4% trend line from all the way back until 1989. You can see this is for the nation. This isn't just for Cleveland, but this is nationally. Back in 08 and 06, before the crash of 08, we were, as a nation, 24% above the trend line of 4%. I know I'm losing some of you that don't understand, that don't like charts and graphs and math. So just hang with me if you can for a few more minutes. But what happened is once the bottom fell out in 08, 09, 2010, we were way undervalued. Homes were way under where they were pre-real estate financial crash of 06, 07, 08. We didn't get above the trend line until 2021, and everybody's starting to know in the real estate world what happened in 2021 and 22. It was like craziness for a couple of years after COVID, where home prices were appreciating at 10, 15% a year. Now, when you look at this for 2023 and 24, yes, we're above the trend line, you can see, but we're only 9% above the trend line. So it's not way overvalued like we were back in 2005 and 2006. And what we're already starting to see is, again, home values starting to flatten out. The reason nobody's predicting a crash of real estate home values is we've not been building enough houses. So there's a real shortage of inventory. And the bigger challenge is shortage of inventory in homes, say under $300,000 in, our neck of the woods here in Northeastern Ohio. And no builder is running around building houses under $300,000. So we have a huge undersupply of homes in that price point. And that's why you see homes that are cute, decorated nice in that price point flying off the shelf still. If you look at these new home starts nationally, you can see in 2005, 2006, 2007, we were building way over 1 million homes a year. Well, if you look at 2009, 10, 11, 12, 13, we were way under the average of 1 million homes. The government says that, that a good, healthy supply is if we build 1 million homes a year. Well, we've not done that, again, since 2007. We did that once in 2021, then COVID hit, and we built 1 million homes in 2022. The adjusted numbers for 2023 I just saw were just at about 1 million. So it says 908,000 here, but they readjusted that and it ended up closer to 1 million. So that being said, we've got a bunch of years here where we're way behind. So even if we were to continue to build new homes at our current pace, we're still way under what we need. So that's another reason that we feel pretty confident that values are not going to come crashing down. So in review, mortgage rates are holding at about 7%, homes priced competitively. And if you have a great house in good condition and you have a fantastic agent and you've called somebody in that ad hoc team, your house will sell very quickly for a great price. We still have, again, shortage of new homes. There's still a shortage of rentals, and it's continued to be a strong seller's market. So if you have any questions, again, each neighborhood and community is very different. Real estate is hyper local. Please reach out to one of your favorite ad hoc team realtors and we'd be glad to help you out. Enjoy your weekend and happy Father's Day.